Today I'm uncovering everything you need to know about superannuation and how you can use this to purchase your first home, because I have to say this is the biggest change to the market since the introduction of negative gearing and will have drastic impacts on the property market. So today we uncover what the Australian Dream Report is, how you'll be able to use your super to buy your first home, and what impact this will have on the Australian property market. What is the Australian Dream Report? You don't need to be an expert to know that property prices are skyrocketing. Looking at data, it highlights this, with the top 5 Australian capital cities increasing by more than 19% year on year as of February 2020. And the goal of this report is essentially to increase home ownership, saying that Australia had one of the highest rates of home ownership in the world. Our home ownership rate rose 52.5% in 3 years before the Second World War to a peak of 72.5% in census 1966. Okay, so let's recap. The Australian government's trying to look at ways to make home ownership more affordable and more accessible to more Australians. But does Australia really have a problem? And you might be thinking, well, hey, look, the Australian home ownership rate at the moment is 66%. We're doing pretty good, not too far off the 1966, but the data shows a troubling trend. You see, deep diving in the data, and it's evident that it's based on the cohort you're born in as to what the home ownership is. So whilst the 66% is an average, the younger you are, the less likely you are to own property. And realistically, this is what this report was designed for, to help more Australians own property, and more specifically, those on the younger cohort. So now let's look at the recommendations, and then from there, we're going to unpack specifically what these will look like. Looking at the super, the committee recommends superannuation as a tool to support first home buyers, saying that one potential policy that was discussed throughout the inquiry was allowing first home buyers to withdraw their super or use it as a collateral to assist with a home deposit. And in the report, it really wants to make sure that they're clear that this is not another first home super saver scheme, which was essentially a scheme that allowed home buyers to make additional contributions to their super and use it almost like a savings account so that they could withdraw it and put that towards their home deposit. This would be completely different. And stick around, because in a moment, I'm going to show you exactly the 2 ways you'll be able to use your super under the proposed suggestions to buy your first home. And ultimately, the committee recommends to the Australian government to pass into legislation 2 key items. Firstly, to use the superannuation to enable first homeowners to buy their first home. And secondly, to allow a process whereby the superannuation is used but not in form of a deposit, more as a guarantee. And using your super as a form of deposit would be the absolute game changer, because essentially it would mean that you wouldn't have to spend the money in your super, but you would use it like a guarantor loan. And let's look at how this would play out. So firstly, let's say you're buying a home for $500,000 and you have superannuation of, say, $150,000. Firstly, the loan would be split into 2. First, one is 80% or $400,000, which is secured against your home. The other 20%, which in this case would be $100,000 or 20%, would be secured against your super. In this way, you would avoid paying mortgage insurance, and the collateral in your super, being $150,000, secures the 20%. Thus avoiding mortgage insurance. This is the exact same way a guarantor home loan works too. And knowing this information means that if your super balance is $40,000, you could afford a property worth $200,000. If it's $80,000, you could afford a property for $400,000. And if it's $160,000, you could afford a property for $800,000. And if you're trying to figure out how much your budget could be, then the formula is very simple. All you do is you take your superannuation balance, in this case it was $40,000, divided by the 20% deposit that we'll need, and it'll give you your purchase price. So if you're in Excel, it's very simple. The formula is as simple as the superannuation balance divided by the 20%. So if and when you know your superannuation balance, you'll be able to tell and know exactly your budget and how much you can spend on your first home. And at this point, there's 2 logical questions to ask. The first is the likelihood of the recommendations being adopted by the Australian government. And the second is the impacts of what this will do to the property market. So let's jump into the first. In my opinion, it's a very high chance that these recommendations will be adopted by the Australian government. And if you want to be one of the first to know when this legislation's passed, remember, hit that subscribe button. We're going to keep you in the loop and let you know exactly when it happens. It's because we're in an election year, which means that parties will be looking at every opportunity to appeal to as many voters as they can. And with over 96% of Australians enrolled to vote, and with more than 6 million people between the ages of 20 and 39 in Australia, it means that this will appeal to a large segment of the voting market. Now let's look at the likely impact this scheme will have on property prices here in Australia. And ultimately, it's all going to boil down to supply and demand. If the demand is high and the supply is limited, prices are naturally going to go up. So with this scheme, we would expect it to unlock more first home buyers who can enter in the market. And if history has anything to prove, that every time there's a new first home scheme that comes out, we see more first home buyers being able to enter the market. And you can see this chart here where it shows that when the grants open up, more first home buyers can enter the market. This then translates into higher prices. So looking at this graph, we can see the number of dwellings financed for first home buyers versus the annual growth in Australian dwelling values. So with the orange line, this is the value index, and it's an annual growth. In the blue line, it's a number of dwellings financed by first home buyers. And what we can see is as soon as a scheme comes into play, the number of first home buyers enter in the market increases and has a flow-on effect to Australian property price values. You can see that there's a high correlation between the two. And this is something that the government's acutely aware of, with the report noting that encouraging first home buyers to raid their super for housing deposits could see the median prices in the big 5 cities increase between 8 to 6%. And looking at the median price, you could see that on average, prices will increase between $60,000 to $120,000 depending on the city. So if you are a first home buyer and looking to enter the market, beware that as this scheme opens up, it allows more and more home buyers to enter the market, essentially unlocking those who were priced out or who didn't have sufficient deposit to enter. This means that if you're ready and able, you may consider getting in the market now before the scheme opens up and pushes property prices up as the competition only increases. Here at Hunter Galloway, we get home loans approved. So if you live in Australia and looking for a mortgage broker, we can help. Our service is free and we help everyone across Australia. So reach out and call us on 1300 088 065 or visit us online at huntergalloway.com.au. Thanks for watching, and I'll catch you next time.